see we have profited 8.17% on account. To be exact, $8,168.95, whatever. We traded for 4 days out of the 3. I think that's a little less under a week. Win rate ratio was 71%. Let's go through some stats. Number of trades was 7, but that was due to some extra positions on a couple other setups. I think it was actually 5 trades in total. So we have a loss rate of 29%, win rate of 71%. Our average loss is 1,000, average win is 2,000, average risk reward 2R. It says 1.99R, but I could just round that off to 2R. So let's go down. So 2R, so if you think about like this, basically just 2 times 7, 14, minus 3, 11. That's still 11R. So think about like that at a handful of trades, like 10 trades. So that's how we're viewing it, and that's how it's showing. So we're here. So our first trade, we get 4.77% on the account. Nice big hitter, $4,000, $4,777.2. Second trade, we take 2 positions. This is 2 positions, and we'll lose like 2% in total, which is okay. I'm gonna show you guys that. Nice strategy loss. It's actually a good loss. Right here, we got 1.20%. We're really risking 2%, so we should have got 2%, but I'm gonna review that with you guys too. Then we have this trade right here, 2,240. But I think this trade is together, so it's like 3,600. So it's like 2, 3, 4, 6, like 3.60 something percent. So it's like 3% basically, 3.5% on the account. And then basically we had like 7,000. I think it was like 7,600 something. So we need to get like a quick hole in one. So I risked like 500 to make 500, and then that's how I got 0.54% on the account, 540 right here, and this is what passed us. So this is our stat sheet. There's no other stats to go to. So let's review the trades. So right here you can see we have a 60-minute trend line, a 60-minute triangle break. You can see how wide this consolidation is, and then we get this nice impulse. Price gives us a demand area, price breaks, retests, then we could drop down to a lower time frame. So on a lower time frame, we could see price give us a touch at the level, it bounced, pulled back to this demand area, and gave us an engulf. Price went below it and went right above it. Give us an engulf. Swing high, swing lows. That's all we're trading. Give us a nice like 1 to 3 or 1 to 3. I think we're risking like 1.5% of the account. And that was our first trade. Let me show you the second trade. So our second trade, as you can see, this is okay, so price went down, retested, went down, created a supply area, broke, retested, and then we're able to drop to the 5 minutes after we plotted our levels. You can see price touched this level, broke, pulled back, coming back to this supply area right here. Once it closed here, give us a nice little solid bar. We took the solid bar. Price was going down, price was going down. While price was going down, I thought, okay, let me just add another position. So I added another position because you see this like triangle right here. I was on the lower time frame on the 1 minute. I seen like a confirmation signal basically for me to add in. So that's when I just added my position, and then price ended up just going up and then ended up pulling back, and then ended up just continuing in the other direction. So I knew, okay, price actually wanted to reverse, which is okay. And it's a strategy loss, so we just move on. So we moved on to the next trade. So I didn't wake up till like right here, literally like right after this engulf candle. But hold on 1 second. So you can see price hit this level first, then broke, then retested. This would have been our entry. You see price went above it, Then went below it. This is an engulf trap. So this engulf trap or this engulf would have been our entry to take it to the downside, but I was sleeping right here. This would have been a loser, a strategy loss. Price when it goes up, pulls back, and now that this supply zone been used, it now turns into a demand zone, and then now price pulls back to here. You can see price went below this candle, and then it went above this candle. This would have been a stop out. This would have been a stop out, but then when I came in right here, price went below this candle, I think, and then went above this candle, and then that's when I entered my trade. Price, obviously you can see I entered up here, but that's because like pop firm slippage or whatever, but I don't care about that. But so we're all the way up here. We take the 1-to-1 though. We're still able to get a 1-to-1 even out of it, and we put our stop loss right here. You can see price almost came down here with this candle. It almost took us out, but it didn't take us out. We got our stop loss right here below the candle, and then price went up, consolidate, give us like a correction and then impulse. And this is like my picture of my live trade. You can see the plus sign right here, plus 325, and you can see plus 9. This is my other funded account. This is my actual funded account. This is my challenge account. You can see the plus 325. So we're actively in this trade right here, and this is just like a live picture. So then let's move on to the next trade. Let's hit TP. So this trade was a 60-minute trend line break, but we had a 60-minute support and support resistance level right here. Price broke, price retested it, and gave us another engulf. This is a typical setup of mine. We're always looking for these engulfs at these levels. This is a good sign of smart money coming in the building, and that's when we want to take our positions. Price went above it, price went below it. As soon as it goes below it, you take your entry. This entry was my designated entry, but I was sleeping at the moment, so I couldn't take that trade. So when I came in, price was like around here. I seen that price never closed at this level, even though it would have got tagged out of our position. Price never closed the level, came up, it went below right here. So this would have been a strategy loss right here. But you can see that it was an engulf trap right here. So we know we're looking for that next candle to go down. So next candle goes down, that goes below it is this candle right here. This goes below, so we're looking to take that entry. Since I wasn't up at that time, I didn't take that entry. But I had it in mind when I got up, I seen this and I said, oh, this, like, I need to get into this move right here because price is looking to go down to this downside. But then I seen the 60-minute trend line break. On the hour chart, it was this whole move right here was an engulf candle, an engulf trap on the hour chart, which made me know that, okay, price probably wants to actually go back down. It's just trapping out traders. So once we got this break, we got this pullback to the zone. Once you see price went below it, once again, goes above it and then goes below it, that engulf. Now we take our position right here. When it comes to breakouts, we want to put like our stop loss above the zone a little bit, because price tends to move and bounce around the zone. As you can see, price came up, almost tapped us out, but it didn't, and it just sold off. It gave us like a little pullback right here, but this is called a 5-minute pause, and usually gives us a signal of a strong sign of momentum. And then after that, I closed my computer, came back, and price just impulse down right at TP, and then we move on to the next setup. That was a nice 60-minute trend line break too. So right here, we have our daily levels. So this is our daily levels. This is a daily supply and demand zone. You can see a channel right here going up on the hour chart to the daily supply and demand zone, supply zone. Price breaks out, retests this zone, as you can see even on the channel on the hour chart. So it breaks out, but we can see this impulse down, and then it's strong, followed by another impulse up in the opposite direction, which is a V bottom. That V bottom can mean like price wants to go in the opposite direction. So once we've seen this, okay, so this is a gap right here because it's Sunday. The market gapped, then it left us a demand zone right here. Once price broke, retested, we dropped to the lower time frame, and we're looking for buys because that was a daily trend line, as you can see. This right here, sorry about that. Oh yeah, I forgot to mention, this right here is a daily trend line. So this right here is a daily trend line. So we thought, okay, so even though it's counter to the hour in the daily, it's also breaking the trend line. So it's like us already just getting in the move early, but not technically. So then right here, price hits a level, it bounces, pulls back, which is what we're always looking for, that pullback. It wicks up the zone. Once it gives the sell, you can see this like tail bar, like deep tail bar. So it's showing like weak momentum to the downside, and price wants to go up. So when price started going up, I usually don't take these tail bars. I like when price closed at the level, so I wasn't trying to get in, but then price came back down to the second supply and demand zone, touched this zone right here, and when it started going up, I was like, okay, I just got to get in, because I was really just getting in because I needed to get that $400. So I had to get that 400 so I could just reach that mark to get my 8K. So that's when I was just like, okay, I just need to get in and just try to get a quick little scalp for like 500 so I could just get past that. But I did have my other funding account that I was trading. So that's when I plotted this level, and that's when I got it right here. And then this position is this is the $500 position. In this position, as soon as price is going up, it just dropped. And then I kind of felt like, I shouldn't have done it. But then I knew I should have, because it is a 6-second supply and demand zone. It's respecting it. I put my stop loss below it. So then I said, okay, I'm gonna just hold it, close my computer. I came back. When I came back, it was like right here. I just drew this line. I realized it was a forming triangle. And then when I left the computer, closed the computer, when I came back, I seen this impulse, and I knew, okay, price is a triangle. It's a breakout. Consolidations always followed by an impulse. There's always going to consolidate and then break out, consolidate, breakout, and that's how the trend works in the first place. So in an impulse, I know, okay, this is a good sign that we're going to go up. I closed the computer, came back like 10 minutes, price was right here, and then I just watched it pop through, took my money, and then we're done for the day. So that's how we passed it.